So the current headlines read that oil just entered a bear market, trading around 43. Let me get the actual price or the current price around $43 a barrel. And anyone knows that once something meets the headlines, the show is over. So would I be looking to short crude now? Of course not, because if I was, I would shorted it way before the headlines were even, or even the market participants would have predicted just by the downtrend that oil is pretty much entering the bear market. And my current perspective is that I just think oil is pretty much retracing and going towards this key level of support, which is around the 61.8% ratio. Let me bring it up here. Let me show you guys what I'm looking at. So as you can see here, I don't have actual historical table data from TD Ameritrade. Hopefully they can implement that in the future where I can pretty much download the data and plug it into my system and get key price levels. Well, what I do have, I do have a Fibonacci put into the lowest point from the highest point, which gives me an overall standing on where I think crude is going. I definitely think I actually think crude is going to actually retrace from this level, this 42.68 level, and head back towards $62, about $62.70 a barrel. And why do I say that? Because I'm going off the 61.8, which is a golden ratio from the lowest crude ever been and from the highest ever been. And this is pretty much the median price on which is a key level. If you're looking at trying to see where crude may be bouncing from, if it does, retraces from this current level. And the current level, to me, is just a key area of support where you have a lot of resistance between the 62.70 and this point here, leading into the current price, which is about 43, 44 barrel. The key level here is around 642.68. So, and as you see, crude did bounce from this level, and from this level, what I will be looking for is a corresponding, a confirming candle showing that the bears are in control, giving me a lower low, or a candle showing me that there's key area of support where there's a lot of buy-in at this key price level. Maybe a higher high for tomorrow as we get inventory data in from crude, from the EIA. So this is a key level. I don't think crude will continue to a bear market, but this is a key level in where we may see a nice pullback to around this 52 area leading to 60. I think crude may, if it bounces from this level here, with strong bearish bullish tendencies, we may see crude hitting about $60 a barrel before the end of the year is out. But of course, below this level, if you see a strong candle leading downward with a confirming candle with a close below this level, then we may say the bears are in control. We may see further moving south. So this definitely is the key level. But from here, what I do, I don't actually trade futures at the moment. But what I do, I pretty much trade the corresponding ETF, which is USO, a United States Oil Fund. It's the ETF that pretty much moves in line with crude. So if crude goes up, this ETF goes up. If crude goes down, this ETF goes down, as you can see at the moment. I haven't ran the fibs on. I actually plug these historical data from Yahoo into my system, but I will do that by the end of today to get an actual key level of support and look for a confirming candle below this level around here. I believe is which is going to pretty much give me a good reading that this is a key level. But that's what I will be looking at. And from here, I can pretty much hedge. I can pretty much take a bullish position here, and which I will show you in a moment. I could take a bearish position in the FX market. But from here, since this ETF moves in line with crude, you actually hedge it against a U.S. equity like BP that moves in line with crude as well. So if crude is declining, more than likely, 80% of the time, BP will be declining as well, because this stock is heavily dependent on the price of crude. So these two can be hedged against each other, pretty much buying a position bullish in this ETF and going bearish in BP, or vice versa. But what I like to do, I like to go to the FX market, and from my broker, I download the historical data, plug it into my system here, which gives me a nice key price levels in which I plug in the Fibonacci calculation at the time. All these buttons here for my macros are different calculations, which give me key price levels. But from these price levels here, gives me actual points of supply and demand, where I can pretty much draw my Fibonacci levels. Let me see if I can bring that up here. For instance, the Canadian dollar moves in line with crude. If crude goes up, the Canadian dollar 80% of the time will go up. If it goes down, the Canadian dollar will move in line with that. But since the Japanese yen trades heavily, it's kind of hard to see the correlation when the yen is pretty much going against the price of crude. But what we do have here, we do have these price levels that I did get from my systems, which are key price levels in which I draw my Fibonacci retracements from. And as you can see here, this area right here, to me, is considered as a key area of oversupply. And of course, when we have oversupply, there will be resistance. And as you can see today, the Canadian dollar did retrace from this key level. And take note that these levels were drawn a week before it actually hit this level. So my thing is, once I actually get the price levels for my systems, I draw the price levels until it runs outside of these channels. And I pretty much watch the price bounce off these key levels. And as I stated before, this level here is key oversupply, weak supply, which I'll be doing most of my selling in this area. This area is weak demand and over demand, which I'll be doing a lot of buying in this area, which is a key area of support at this level. But what do I do from this level? I pretty much draw my Fibonacci retracement. If the trend, underlying trend is going up, I draw my retracement from one key price level to the next, which will give me key points if this price decides to retrace. If it retraces from this level, I will be looking to get in hopefully around this area here, 84.20, 84.30, 38, and get a take profit around the 61.8, which is the golden ratio, which is around 82.85. So that's about 50 pips. So if I get a confirming candle that the bears are in control and I get a lower low, I will look for a pop-up around this level here, in this area here, around 84.20, 84.15, 10. And I will look to get out around this area here, 84.85, 84.80, for about 50, roughly 45, 50 pips. Also, and contrary to that, let's say this, if we get a confirming candle above this key area of resistance, which will become key area of support, and this price and the bulls are continuing to be in control with this actual pair, I pretty much draw my retracements opposite the trend, which will give me retracement levels above this key area of support. So around this key area of support, if it goes above a confirming candle close above this area here, I would look to get in around 84, same area, 84.38, and get out around this area here. The 61.8, which is about 85. That's about 50 pips. So it's the same either way. If the trend shows bullish around this area, I can get about a good 50 pips out of here. If it continues to be bearish, I can get about a good 50 pips from going to the downside to this level here, about 82, 85. So it's just the way I look at the market when it comes to this correlating the futures market with equities markets, with ETFs and FX market, and how you can pretty much hedge each market against each other. And as you see at the moment, this Canadian dollar is not moving in correspondence with the current downtrend of crude. Also, too, I can look at the US CAD, and as we see here, we're getting some weak sentiment from the Canadian dollar, but also we have some bullish sentiment from the US dollar. So you just have to find a correlation. Sometimes you may find a correlation at this point here. You see this downtrend from Canadian dollar and the Japanese yen at the same time when the price of crude was going down. And I don't think I stated before, but the reason why the Canadian dollar moves in line with the price of crude is because a large percentage of the Canadian GDP is heavily dependent upon the price of crude. So when the price of crude diminishes, the Canadian, as you see here, the Canadian dollar will diminish as well. So and this is what we're seeing, this current, downtrend. So yeah, so this is definitely a key price level. I'm thinking that crude will bounce from this level and head back towards 60-ish, maybe over 50 by August. It all depends on just the sentiment of the market. I mean, that's my projections. It can go either way. Everything is always 50-50, but the biggest thing that I'm looking at in the market is I'm trying to get into a position before the headlines know about it. So there may be some key buying at this area here, some key bullish entries. Who knows? Let's see how it goes tomorrow. But definitely, crude is definitely sitting at a key level. I appreciate it. I'm trying to do some more videos actually explaining how I look at supply and demand on the FX market, the equity market, and draw my price levels from there, my entry points, my exit points. But I just want to do a quick video on the price of crude, current price of crude as of June 20th, 2007. All right, peace.